Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So definitely a tricky day. Yesterday, markets looked as if they were going to break, the upper support, and then they grinded all day long. Powerful move in biotechs, powerful move in high beta tech. Basically made you think you almost had like a little green light, to be long multiple positions because of the action. And then today you walked in, we were down 10 handles. And you had like two spots to navigate. I talked about, using in the spiders, 205 to 205.20 or the SPX 2050 to 2054 if you're actively long to use as a stop, because if that doesn't hold, then you're going to hold your nose, go underwater, and have to deal with 2042 or below. So lots of different ways to do it. Some guys maybe got out in the first 30 minutes, and some guys got out and flipped, or some guys, just whatever they did, it just held and bought the whole way down, and some things held in and did okay. So it all depends what side of the coin you were on. I actually came in, pretty long, and was able to salvage some longs and get out relatively well, in the first 30 to 45 minutes, and then, flipped a little bit later, and it was not the easiest, easiest to get anywhere based on the close. So anyway, let's go to the chart of the SPX, and, overall, starting to get very, very, sloppy in here. We isolated two spots, one being right here and one being, lower. If you, were quick, you could have got out over here and got short here. If you could have also shorted here, but you had to be real quick and cover into the 21 day. So it's always good, to use the moving averages, because again, if you got out at the 8 day, you could test the 21 day, or if you got short at the 8 day, you can cover a little bit and then hold a little bit, and then, kind of see what's next. And at this point, still hanging in there. But the market's getting choppier. Remember, we reversed up and then had a little inside to down day, bottom end of the range, reversed up, opened lower, didn't fall apart. So lots of movement, but not, getting anywhere, and a little bit more dangerous than normal. You go to the 5-minute chart, I posted that also, just to show you navigation purposes. So here it is. Here was your big gap down, after yesterday. You gap down, and basically we isolated this support spot from 230 yesterday. So for about an hour, it looked as if it was trying to perhaps, hold it to maybe fill the gap. You had some strength in bios, you had some high beta tech going green, et cetera, and then all of a sudden on this wide range bar, I know that got me out of the rest of my longs, and some guys were able to be quick enough and get short here, thinking that once we get through this 205-ish area, we're going to get at least a move down to 204, which was big support, which was also on the chart. So, so right here, this could have been your out, or if you came in flat, waiting to see if this gap got filled, which it didn't, your spot to get short. But this was like you're cheating, not cheating, but you're leaning short before the actual level. So then came into here, bounced up, and then really right here, it broke again, and then this was your first clean short underneath 204, and from 204 gave you a move all the way down to as low as what was this? 203.24. So really, if you got short here, tier 1, you almost had your confirmation here at 204, and then you had to take some off in the money, and then figure out what's next. And what happened was we came back up to basically close near 204 just to keep everyone kind of guessing. So I'm a little net short overnight. I wouldn't be surprised if I'm dealing with an open somewhere into here tomorrow because it's Friday, just the way that things have been so choppy. So if we gap up tomorrow, maybe 204.74, 204.75 would be something that you could fade. If we gap lower, we'll see how today's support holds. But either way, this was your hour decision spot as an active trader. Didn't fill the gap, get out here, maybe get short, first move down, a little bit of a reflex, another spot to to adjust around, and then we didn't close on our lows, and at this point, still kind of tricky, kind of tricky, with the way things look here because of the two-way action. But ultimately, it's the first time we've tested the 21-day during the course of this rally, except for right here, and I guess we'll see what happens tomorrow. As far as some things that were weak, I was in Apple, and Apple I got out pretty much right around the 110, 109.80, which is what was the first hour area too. And at this point, Apple is still below the 200-day, looks a little vulnerable. Didn't exactly get into the gap, but it's still actually above the 21-day, so it's stronger than the overall S&P. But to me, it was downgraded, and just I didn't love the action. 108.54. How could you have dealt with it? If you're watching me on the VTF, and you want to look at it the same way. Basically, he came in. I was trying to buy a little bit into the support, and then really, as it didn't fill its gap either, this is pretty much where I was just like, you know what, I'm out of it. And then it traded below, retested, and then, fell off into the close. So, I'm flat Apple. I don't think it's really a short or a long. It's just to let it figure itself out. It's come a long way. This is where, it broke out from and held, and this was another nice pattern here, and now it's starting to get a little bit more random up here as it contends with the 200-day. Netflix went green, looked as if it wanted to go, and then got rejected at the 200-day again. So it's still, not horrible, but the better trade was down here, and now it's still hugging the 8-day, but at some point it does feel a little vulnerable. We'll see what happens there. Facebook was semi-green early on and then pushed above, this little spot, but didn't have enough juice to hold it. All in all, still holding the 21-day, just getting a little choppier. So just like everything else, I guess, what side do you want to be on it? Google and Amazon, were weaker, but still held the majority of yesterday. I came in long Amazon, tried to go a little bit. I got stopped out between 594 and 596. At this point, you look at it, still an inside day, but I guess I'm just going to wait and revisit it. It's still above here. It's still flagging, looks okay. What did it go as low as? Went as low as 589. So with this one, just to show you how I dealt with it, also in the first 5 minutes, you had a little bit of a push-pull right here into this was my support spot that I was looking at, and basically. It did not fill the gap. Like Google went green, some things went green. It didn't, so it was a little bit weaker. Got rid of some here. Didn't get rid of all of it. Came up, bounced, sold the rest of it, said, let me wait and see, and then it just kind of went down the rest of the day, so I'm going to wait. The bios were sort of strong. The IBBs, if you take a look here, still hanging in there. This was, when we put it on the map that it took back the 50-day. There was a small red dog reversal. Some guys were tweeting at me saying, can I short it? I'm like, sure. Went above 585, went as high as 587.77. You want to do a cute short or sell your longs. It went back below 585.86, be my guest, and it went as low as 580. So 5 points in the money versus a $2 risk after a huge move. Now we'll see what happens tomorrow. Maybe, it pushes a little bit below and you can get some kind of move around this 279, pivot. So we'll see what happens. If it opens below and reclaims it, it still acts well. But overall, decent trade. In my note, I talked about, looking at Tesla, that finally today with the new reservations, maybe they'll sell that news. It opened up well, it pushed around that pivot. When it went down like $3, I'm like, you have a, decent red dog reversal, strategic short setup. And first move was down $5. And then it wound up going down and closing, really red. So, at this point, people are like, how do you do this tactic? Well, it pushed above this this spot here of 267.74. Went as high as only 269, so only $1.50. Went back below. You could have shorted versus that, and wound up closing down $10 below. So a $10 short with $2 risk. That's pretty good for Tesla, considering look how far extended it was from the 8-day moving average. And now either it hangs out here. Some guys went out short it. If that's you, okay. I do still think. It's got some room to at least get to here. So maybe if it opens up flat and trades below this, you get short tomorrow. If it opens up down, you'll make some money. I wind up not going out short it just because it's Friday. I don't feel like dealing with it. But ultimately, very strong stock, but it's a bit extended, and some news might be out now on it. Gold had a big move and held up. I don't think it went as low. This is out of sequence print, but it did close above this spot. It's been very random and erratic from day to day. So, if you're long it tomorrow for more follow through, hopefully it works for you. Every day has been an opposite day, but ultimately still in this big upper channel. And some guys think that it's going a hell of a lot higher. At this point, it's held the 50-day, looks okay. The bonds are screaming, telling you, that seems like equities want to go down. It's been the TLTs have been above the 8-day moving average since this spot, trending higher. closed well, and I guess, maybe it's working its way back to the highs. If that's the case, probably not good for equities at this area. Banks are still very weak. Goldman Sachs, closed on the dead lows. You don't see anyone really long the banks because they've been relatively weak, and then now they're below every moving average. JP Morgan also, with the buyback even, broke below the pivots that we listed. It's now below this spot here. So, maybe some guys went out short it. If that's you, okay, it looks like a short, but for me, it's hard to be short the banks. I don't know why, but they are very, relatively weak. They're definitely not longs here. They're below all the moving averages, showing relative weakness. Some think that you can't really trade this way, but the FXY, sorry, the yen was a reason why, our markets were very weak. But you do have a little bit of an exhaustion high here. So some guys went out short the FXY. If that's you, it's a little risky. But again, look at the last time you had a little topping tail. It pulled back to the 8-day. It's very extended from the 8-day. Perhaps, you get a gap fill here tomorrow. So I think it's a better short than long the way it's extended. Or if you were long it, your spot to get rid of some. As far as Europe, still very weak and broken. The EWG below the 200-day. Made another lower low here today. It tried to rally with the market yesterday, but DAX said and now look at it. So that's I think part of the risk of being short our markets here overnight is because the Nikkei is getting so oversold that if it bounces, and Europe's so oversold if it bounces, it'll probably lift our futures tomorrow, and then we'll have to deal with it because our markets have been ignoring that weakness somewhat, and now it's starting to pay attention. So maybe. That's what I think the risk is. I don't think there's any risk of good corporate news or good economic news tomorrow. It's just whether overseas that has been such a drag gets a bounce, and then that lifts our markets tomorrow, and then we're still in that range. So we'll see. Oil was off a little bit, nothing crazy, and all in all, the move in the S&P has been, it's been very, very impressive. Last time, you had a move like this, last year. Remember that right here, boom, boom. When it finally topped, it kind of, you had your first move lower, and then it became very random. In here, I remember, on this day, we all thought we were going to break out again and got bagged, and it went lower. And then on this day, we engulfed it, and then all of a sudden trickled lower, reversed, again lower. This looked okay, and then lower. Just, and now you're kind of getting the same thing. We're reversed up, lower, reversed up, lower. It's just. So try not to do too much overnight because it's starting to get random and erratic up here. So that means, take your intraday trades that maybe each day, you're going to have a little less muscle memory from day to day. Plus you have less buybacks because we're getting closer to earnings and we're also away from the start of the month. So you have less new flows. So, I would not be buying high to sell higher. Maybe you could buy the dip and trade versus levels. And again, the market's not falling apart where you can't press lows today. You have to be very strategic. And, that's about it. Hopefully, you've booked a decent amount of money as we've had some consistency and you've had some follow through over the course of the last few weeks. There's been lots of great trading in individual names. And now when things start to get choppy, maybe just take your size down. Be a little bit more specific on when you want to be long and when you want to be short. Maybe go, if you've been in 12 to 15 positions, take it down to 2 to 4. To figure it out. And then once things settle out, you could take it back up again. So don't give back money if you've had a great run, and make sure if you're not seeing it or you're frustrating, don't just revenge it because something happened the day after you thought it was going to happen, because recently it seems as if, like yesterday, everyone wanted the market to break 204, including me. Didn't happen yesterday, and then that trade below 204 happened today. So it is what it is. Just move on, and it's Thursday, have a cocktail, and hopefully you had a decent week. And if you had a choppy week, then make sure not to get frustrated and give back what you've made in the weeks that had a little bit more continuity. Have a good night, and I'll be in Short Hills tomorrow, but I'll touch base on Twitter. Have a good one.